Good afternoon. Market news now. Shares in Asia were higher as Chinese stocks saw a strong rebound following recent heavy losses. Hong Kong's Hang Seng Index closing up 9% higher, but remaining down more than 2% for the week. The U.S. Federal Reserve is set to announce its latest interest rate decision. The central bank is widely expected to raise rates by a quarter point in its first hike since 2018. Meanwhile, locally, Growth Point Properties reported a 5% increase in interim dividend as the operating environment in the retail and industrial sectors gained momentum, but its office market was still in the doldrums, with vacancies rising to a record 21.2%. To talk to us about the latest when it comes to markets, we are joined by Carmen Mpelwana, who is a portfolio manager at ABSA Asset Management. Carmen, thank you so much for your time. Quite an interesting rebound when you look at what's happening on the Asian side. How's that filtering to our local markets?
Yeah, so we're definitely seeing risk on today, and that's largely driven by the oil price dipping behind the $100 a barrel. So that's given some reprieve, and so global markets have taken that and just run. And as you've mentioned, we've seen a recovery in Tencent as well, which has fueled a lot of what's happened in the East. So all in all, industrials on the JSE have pulled through significantly. That's due to Naspers and Process specifically, as well as we've seen retailers recover, whereas for the first time in, I think, about 2 weeks, the resources are laggards on the JSE.
Let's talk about Naspers and Tencent, because when you look at their performance over the past couple of days, it reignited that conversation about the discounts and reducing that discount. And some of the analysts, depending on who you follow on social media, were quite cheeky about how they're seeing this idea of splitting Naspers and Process and whether it actually solved the problem in the first place. I mean, how are you seeing the whole Naspers Process discounts?
Yeah, so I mean, we could debate this until the cows come home. Part of the reason for the spin-out of Process in the first place was to unlock that value, and we've seen that that hasn't happened and that discount hasn't changed. Instead, it's actually exacerbated itself over the years. So it doesn't seem to be that there's a way to unwind and allow the discount to actually yield value for investors as it stands. And despite that, you know, Naspers and Process remain two of the top three biggest by market cap on the JSE. So I don't think we're going to see a solution anytime soon. And similarly, you'll see Tencent sneezes and Naspers and Process catch a flu as well. So anything that happens with Tencent, it's very similar to what happens to the two on the JSE. We did see Tencent close up 23% today, and we're likely to see Naspers and Process close up at least by 18% today.
Locally, we did see some company results. I mean, which one caught your attention?
Yeah, I think with a lot of the themes that we've been seeing around global supply chain pressure and the exacerbation of that with what's happening in the Ukraine, we looked at Libstar specifically, and being a food producer, we expect to see the impact of high input costs on results, and that has come through. Despite them being able to grow group revenue by 7.1%, we did see a squeeze in gross margin, and that was definitely off the back of increased input costs. Management has similarly guided that they expect this to continue for the next reporting period. And we're likely to get that from, number one, it's in terms of logistics, and so fuel prices have a direct impact on that. So the numbers were a bit soft from Libstar, but nothing that I think is unexpected from the market, specifically on the back of all food producers struggling due to CPI yielding lower GP margins for the groups.
Everyone is looking to the Fed, I suppose, as the main risk event. What kind of messaging are you expecting to hear today?
So there are a few data points that are key to look out for. I think the one that won't be surprising is a 25 pip increase. Had it not been for Russia invading Ukraine, and sort of the geopolitical uncertainty would have been eradicated or would not be there at all, we might have seen a 50 bips increase today. Having said that, this is the first increase since 2018 for the Fed, so definitely a key event. I think what's going to be more detailed in terms of the way forward for them, seeing that the market is currently pricing in 7 hikes for the rest of the year, is to determine based on the summary of economic projections that they will disclose, whether there's a view that high inflation is here to stay or whether it's more transitory. If it is viewed as that it's going to be here to stay, we're likely to see a additional hike in the current year. And if the view instead is that it's more transitory and in 12 months' time we'll see inflation coming off, we may look for only between 5 to 6 hikes for the year.
Before I let you go, to what extent do you see some of the lockdowns in China being an extra contributor to the entire inflation narrative given the lockdowns?
Yeah, so I think China going in the opposite direction of the rest of the world, despite the fact that they are saying that Omicron is the reason for the current surge in cases. We are seeing a complete lockdown, as you've mentioned, and that affecting almost 50 million people across China. And the concern around it is specifically that these places have factories which have been shut down, number one, and these are factories which manufacture car parts as well as iPhone devices as well. So you're likely to see some squeeze in terms of the shipping of those. And then to add insult to injury, they are also putting a halt to truck traffic. So you're seeing ships being docked at the ports for longer than expected. You're seeing shipping costs rising. We've already seen an increase of 3-fold year on year and almost 12-fold over the last 2 years.
Yeah.
So the supply chain impact's going to last for a little bit longer.
Carmen, thank you so much for your time. That is Carmen Belwana, who is a portfolio manager at Absa Asset Management, giving us her perspective on the latest when it comes to those markets.